can write 1 million people. It doesn't matter. It's really up to you. Okay. You decide how you want to share your money. Additionally, the law allows you to change it as and when. So if you add somebody and the person is irritating, you can come and change the person. Yeah. So that's for survivors' benefits. Then we have what we call invalidity. I don't like mentioning that word. It has a lot of very tricky letters in there. But invalidity, this is basically what it means. You are in active service. You are working, whether as a formal employee or as a self-employed person. You are in active service, and then for some reason, you are either sick or you become invalid in that maybe you have an accident such that you can no longer work, and it is certified by a medical board and corroborated by Ssnit's own medical board. Then Ssnit, regardless of the fact that you haven't contributed for a long time, Ssnit pays you until you pass on. However, there's a caveat. So in the case where the person becomes invalid, that's what we call invalidity pension. So for instance, maybe the person becomes sick such that they can no longer work, or maybe in the course of carrying out their duties, or even at home, they have an accident, and because of that, they can no longer work. Then Ssnit pays you for the rest of your life.
Does it apply to drivers too?
Yes, in fact, for an occupation like commercial driving, where they are always on the road, they are in their cars and things, this is even more important to them because they stand a high risk of having accidents than somebody typically who wasn't involved in their line of work. So yes, it applies to them as well. Like I said, it applies to both the formal sector and the informal sector, and it cuts across. So whether the person is a commercial driver, in your case for commercial drivers, yes, it does apply.
So what if the person hasn't met the standard, like 15 years?
The minimum requirement. That's a great question. So here's the thing. The only caveat or the only requirement which qualifies you for invalidity pension is that you need to be an active contributor. By active contributor, what it means is that if your contributions are looked at for the past 3 years or the past 36 months, cumulatively you must have paid at least 12 months out of the 36. Once you've paid 12 months out of the 36, it doesn't matter whether you contributed for up to 15 years or not, because for that one is a very peculiar situation. So regardless of whether you contributed for 15 years or not, the scheme still applies, and then you are paid for the rest of your life.
For the rest of your life. So they give like a sum, like
a lump sum.
Yes.
No. It's a monthly thing. You are paid every single month until you pass on.
Okay, so like how can they sign up? Drivers.
You can sign up once you have. First of all, okay, let me. All that is required is that the driver has a Ghana card with which they can sign up.
Okay.
If the commercial driver doesn't have a Ghana card and has any other form of identification, that can also be used. If the driver does not have any of these things but knows his date of birth correctly, then the driver can be signed up. So it's not much that is needed in order to sign up. Once you have any form of identification, or at least you know your correct date of birth, then you can sign up.
Okay. So after signing up, I've paid for maybe 5 years and I want to take a loan. Do you give a loan?
Unfortunately, for Tier 1 and Tier 2 schemes, there are no loans that are taken out of it.
Okay.
So you can't take a loan. For Tier 3, however, there are Tier 3, it's kind of like welfare. So sometimes they have different vesting rules that can govern it.
Okay.
That would give it's not really a loan, but you can take a portion of it at a certain point in time, depending on the rules governing that particular scheme.
Are you expected to pay it back? or you just take it?
No. You can take money out. Like, let's say you have 1,000 cedis. The rules can say that maybe after every 5 years, you have access to 20%.
Okay.
So you can take that and then use. But there's no loan system. It's purposely supposed to be for pensions.
Okay, so what is the minimum and maximum amount they can pay, and how do they make the payments?
Well, the tier 1 pensions are paid based on your basic salary. The minimum basic salary is set by the government, sets the minimum wage. So the calculation is done on the minimum wage. 13.5% of the minimum wage is what the minimum is. I think as of today, it stands around somewhere 70 or 80 cedis a month.
Okay.
Right? But then again, you're not just looking at your minimum wage. You're looking at how much you want to receive when you go on retirement. So you should then ask yourself, how much do I think is enough for me when I go on retirement? And then based on that, you start paying contributions that will correspond to getting that when you retire.
Okay.
Do you get it?
So should drivers too pay that same amount?
So like I said, they would determine how much they want to pay. So even though that is the minimum, a driver may say, look, for me, I want to get X amount when I go on retirement. And I know that paying that minimum will not give me that amount when I go on retirement. So I want to pay, say, 100 cedis or 200 cedis or 500 cedis every month. That is determined by them. However, you can't exceed payment on more than 61,000 cedis salary. So if we calculate 13.5% of 61,000, it's somewhere around 8,000. So you can't do a monthly contribution of more than that 8,000 something, right? So those are the limits. You can't do below around 70 or 80 cedis, and you can't go above the 8,000 something.
So how do they make the payments?
Okay. So there are various ways in which you can make payments now, both for tier 1, tier 2, tier 3.
Okay.
There are Momo payments. So Ssnit has a short code, I know. The various tier 2 or private corporate trustees also have short codes with which you can pay.
Is it on all networks?
Yes, it's on all networks. Okay. So you can use Momo to pay. Then you have walking to the various branches to pay. So if it's Ssnit, you can walk to the branch and pay. Any branch that is close to you. Or if it's the various corporate trustees, you can go to any of their outlets and then go and pay. I know that for now, Ssnit does not do direct debits, right? So there's no direct debits where it is deducted from maybe your Momo.
So how safe is our money?
Well, it's foolproof. The system that pensions is run under now, there's a lot of separation of powers. So you don't have anybody having full control of the funds. So there are 3 actors when it comes to managing pensions funds. You have what we call the corporate trustee. You have who we call the fund manager, and then the custodian. Okay. So the custodian typically sits in a bank. They are the ones who hold the money in trust. The other 2 players do not have direct access to it, but the fund managers will give the corporate trustees advice on where to invest. Then they will instruct the banks to do the investments, right? And then based on that, your money is invested. So nobody really has direct access to the funds. Mind you, because of the 2.5% that is paid to the National Health Insurance by the Tier 1 scheme every month, there's also a sovereign guarantee. The sovereign guarantee basically means that the government is saying if ever pensions runs into trouble, they will run to try and salvage the situation and help with some funds so that pensioners' monies does not become a certain type of way. So you have some degree of safety when it comes to pensions funds. It's not something that anybody should be scared of, that they won't get their money. In fact, even in everything, things have been a bit difficult in recent times economically. But if you look at, for instance, Ssnit has been able to pay their pensioners every single month consistently without any pause. And there's also been increments. There's something that Ssnit does that they call indexation. So every year they index the funds and then increase it. And even with all the economic problems, these things have happened. The corporate trustees are also doing quite well. You then have a regulator, the National Pensions Regulatory Authority, who manages this whole space to make sure that the right things are done so that people do not lose money.
how do they invest
the money?
Yes.
Well, it depends. If it's the private pensions, the NPRA has given them guidelines as to where to invest. So they have equity, they have corporate bonds, they have government securities, all of those things, and they've given them percentages as to how they should invest. When it comes to Ssnit also, they have also been given guidelines as to how they can invest the money. Although with Ssnit is a bit more open, so they can invest in fixed assets, buildings, projects. They can invest in securities, as in monetary securities, and so on and so forth. So there are various diverse ways of investing. Now, because it's so diverse, it is put there such that if one security is not doing well, the other one can help to buffer the losses that will be made with the other securities.
So what are some misconceptions about pension?
I think for the most part, a lot of people believe that pensions is for old people. The minute you hear pensions, you are thinking old men and things like that.
Yeah, sure.
But it's actually for young people. At this point in time where you are strong and you can work, that is when you should invest in your future. So that is when you should actively take part in pensions. Also, people assume that when you pay the pensions, when it's time to go for your money, you don't get. You see, I feel like if my money is in the bank, every single month or every year, I want to know how much money is in the bank. I want to know what the money is doing for me. I keep an active eye in the business of the money. But when it comes to pensions, people don't do those things. People don't ask questions. Somebody can have a pension scheme and never ask for a statement, or never even read their statements when they receive it, up until they are going for pension. And so it becomes a problem. Sometimes when it's time to go for your money, you realize that there are certain lapses or certain things that you haven't done, and you now have to do it. But if everything is in order, there's no way that your pensions will take long. Maybe the last misconception I'll speak about is the fact that people also feel that pensions is not good enough to take care of them when they retire. But that is not true. It really depends on how much you're putting in. If you put in good stuff, you will receive good stuff when you're going on retirement. So as individuals, everybody should take their pensions into their hands, even if it's a scheme, and be able to plan properly in order to be able to get a good future.
Why does Ssnit send money to NHIS?
Okay, so I mean, NHIS is also a social scheme where it's like one arm is helping the other arm, right? Now, the good thing about it is that when you go to do your health insurance card and you are a Ssnit contributor and you're an active contributor, the premium that you're supposed to pay for the renewal of the card is greatly reduced for you, just by virtue of the fact that you are a Ssnit contributor, because in any case, some of your money goes to them every month. And so that is a good benefit. So if you look at the Ssnit scheme, for instance, it's taking care of invalidity, it's taking care of your health insurance, it's taking care of your survivors, and then it's taking care of your pension as well.
So what's your message to drivers?
I think that they should take their pension seriously. Some drivers argue that for them, they can drive even past the age of 60. But you can't run away from nature. There gets to a point where you just do not have the same strength that you used to have before. And it's always good to have something that will buffer whichever income that you're making. And so for drivers, they have the opportunity to contribute toward their pension, towards Ssnit, toward the Tier 2 and Tier 3 schemes, in order to make sure that when they go on retirement, they have a good pension. Also, because they face a lot of risk driving around, it's good to be part of a pension scheme so that if any mishap occurs, then you know that you have something to fall back on.
Thank you very much for your time. We really appreciate it.
Please hold on.
And Ssnit.